Okay, well, let's move on. So before Raj is muted now, so that's good. So before we move ahead, any questions from last session? We stopped here. No questions?
So I'm good.
Okay, perfect. Let's move on. So what, while doing a project for Simple Finance, these are some typical milestones what SAP has adopted, what a company is looking at. So just at a high level, not anything technical here. So if you see the stage one is, common understanding what is Simple Finance, add-on, Central General. So business company needs to understand what is Simple Finance. Then IT will time out its benefits. What is going to change, what are the benefits, what transformation option we do have, and then further things go away. You can go through this, areas, how a typical project decision is taken, and what are the things they normally consider when it comes to this new tool, because this is absolutely new. So still some companies have doubt, they are waiting, they are in a wait and watch situation. I want to see other customers implementing and then seeing the benefit and challenges, and then they will try to leverage those experiences. So since this is still not that stable release, so that's why customers are still waiting to have a decision on Simple Finance. Okay. Okay. Additional ledger. So in Simple Finance, SAP has introduced additional ledger. This is a new thing, and when I implemented, I used this ledger in one of the area, but when I talked to SAP, those guys didn't even know that about that, what is the actual use. They were unable to convince the reason of introducing this, but I tried to use it in fixed assets and it worked. So there are a lot of SAP notes on additional ledger, but those are not clear, what is the actual use of this additional ledger. So this is again, a wait situation where, things will be more clear on this soon, but still this is a gray area. With new GL, SAP has introduced parallel ledger concept. So this was with new GL, they said leading ledger and non-leading ledger. I hope everybody is aware of this, because this is way back in 90s, late 90s SAP, early 2000s SAP brought new GL. Now, in early 2015, SAP released Simple Finance 2.0 and introduced appendix ledger concept. So that's a new ledger. The name of the ledger is appendix ledger. It's like leading ledger, non-leading ledger, and appendix ledger. What does it mean? So leading ledger, and there are my throat is not well, guys, so you have to bear with me. The leading ledger is again, 0L, and it stays in simple finance as well. However, the two main tables for leading ledger, Peggle Flexa and Peggle Flex, the line item in the I totals table, are no longer there. So those key tables, Peggle Flex and Peggle Flex, are replaced by new table ECDOCA, which is detailed line item table, and it has around 360 plus fields and provides the basis of majority of reporting in SAP, both statutory and managerial. So now you can see 360 fields in one table. Everything is merged in this, and the key tables for in leading ledger, Peggle Flex and Peggle Flex, are replaced now. So the ledger remains there, but the tables, base tables of that ledger is changed. So that's a technical change. So for user, for the front end, they will still see leading ledger 0L in their organization, but at the back end, when the data is getting stored, that is not going to get stored in Peggle Flex and Peggle Flexa. It will be in ECDOCA. Perspective, things are changed. Any question? Okay. BSEC table will still be there, though I have a feeling that this is probably a temporary, over a period of time, will be solitary table that stores all financial data. In a perfect world, there should have more than two tables in ERP for financials, one for master and one for transaction. With simple finance, every total table in SAP will go away because total can be done on fly as the application run on Hana. So BSEC is still there, but it looks like it's a temporary thing. And totals, every table of total has been out now. So this is a massive change. 0L leading ledger by default get assigned to all legal entities, and no change in that in simple finance. So it works as it was working in UGL. SAP document number that gets generated when you post financial posting is now unique, regardless of which ledger you post, which is different to multiple document number in previous versions. So presently what happens is, when you post a document, get posted into leading ledger, it gives a different number. When it gets posted into non-leading ledger, it gives a different number. But with simple finance, the document number will be same. It's a unique number regardless of which ledger you post, which is a change. So these are the changes. Somebody was asking in last session, what are the changes in the differences in FICO and simple finance? So these are the differences. If you want to make your notes in this header, like what are the differences in FICO and simple finance, you can make these points. The first change was the table for new GL has changed. Second is now the document number will be unique. Now there will be no multiple document numbers. Any question? You can go through the content for 2 minutes one more time, not an issue. But I just want to ensure that these things are clear and these are key to your understanding.
Okay, listen, I have a question. So
Yes.
basically what you're explaining right now, if somebody with a FICO background, they understand all this.
Right.
So if you're teaching this class for, the broad audience, first of all, we have to understand what is, what are you talking about with the ledger? I can understand the posting a document, but, like if a FICO consultant can understand all this differences. So we're new to all this, right? So you need to explain in detail, what is the ledger, basically,
Okay. So ledger is basically, so going one step back, take an example of a company, let's say IBM. IBM is headquartered in US and they are working in the rest of the world in almost every country. So to report their global numbers, they have to follow the US GAAP. The US, you can say when I say GAAP, I don't know if it's clear, but GAAP is basically the reporting accounting principles what a country follows. For US company, it will be US GAAP. So when numbers of IBM as a global will get reported, those will be in US GAAP. But from country perspective, it will be different. IBM Canada, IBM China, IBM India. So US GAAP, it will be 0L ledger when they report their books in US. But from country perspective, different countries can have different fiscal year. Like US have January to December, India has April to March. So different country can have different fiscal years. So those countries will follow non-leading ledger for their own local reporting, because it's not only IBM US has to report, IBM China has to report in China books, China auditors and authorities. IBM India has to report the same. So those company codes will follow non-leading as well, while IBM US will follow leading one ledger. So every company code has to fall under ledger. 0L is by default for each company code, and for additional company code, like I gave example of China, India, Canada, or other company codes, non-leading will also be followed. So that's a ledger concept.
So when we creating our enterprise structure, right? We created a company, IBM, right? For US, we're going to define a ledger 01 to report for US. So different country has a different ledger numbers.
Different company codes, and it will not be each company code will have different ledger number. So 0L will be for every company code under IBM, and in my example it is X1. It can be any number. 0L is standard SAP. X1, or let's say you say Z1 or whatever, it will be for the company code which has to report in other fiscal years. Like it will be same, like IBM in China X1, IBM India X1, IBM Canada X1, additional ledger.
Okay, so the company code will be different for the country specific, right?
Yes, of course.
Okay, but so you could have one company code for the whole company around the world. Is it possible?
No.
You could have a different sales area or different.
See, sales area is for your internal thing. Company code is for legal reporting. If IBM US has to report individually, IBM India has to report in India books, sales area will not suffice. You have to have a company code to report to the authorities, to the auditors. Financial reporting happens on company code. It does not happen on sales area or purchase organization.
Okay, so company code is the country specific?
It depends how many registrations you have, how many tax IDs you have. So a lot of things drive the company code. It's not only country. In one country, I can have 2 company codes, 10 company codes. It depends, how many registrations I have done, how many filings I have to do, tax filing.
Yeah, that makes sense. Okay. All right. Thanks. It makes clear a little bit now.
Yeah. Okay. So the concept of ledger is clear, it's leading and non-leading. So this was working till now. In new GL, this was the concept. Now in in simple finance, they have introduced traditional ledger. So that's appendix ledger. So now we are just talking about leading now. We will move on one by one, non-leading and what are the changes have been done in all those ledgers. Non-leading ledgers still stay and can be used for selected legal entities that need to report in different accounting standards. That's what I just mentioned. Normally, when you post an accounting document, you do not post to the ledger but to the ledger group. Ledger group is where you group the leading and associated non-leading so that enter journal entry is only one. Okay, so ledger group is another concept where you can group multiple ledgers like 0L and X1. For example, if you are posting and if you are making a payment cannot be you are making in one accounting principle or gap in US gap and not in China gap. So payment will be of course in both the gaps, but audit adjustment, year-end adjustment with auditor says, okay, this particular posting will only affect local gap, should not affect US gap because this is China specific requirement. So those should be posted at ledger, while the common transactions which are getting posted at both the ledgers, US and local, can be posted at ledger group, where you can group both leading ledger and non-leading ledger together. So you need not to replicate postings. System will do it automatically in both the ledgers once you make the grouping. So that's what it says. You do not post to the ledger but to a ledger group. Ledger group is where you group the leading ledger and associated non-leading ledger so that you enter journal entries only once and all ledgers within the ledger groups are updated. If you have to make adjustment posting for different accounting standards, you do that in specific non-leading ledger. So if any specific adjustment related to China, then you make it in Chinese in local non-leading ledger X1. You will not make it in both the gap because that's only specific to China accounting rules. You will not make it a US gap because US is not asking to do that adjustment. It's only China asking to do that adjustment. So that's non-leading ledger. This is the concept. Similar to leading ledger, non-leading ledger postings previously stored in these tables in ECC6 will be replaced by XDOCA. The table is changed. You can have different fiscal year calendar for same legal entity, one for leading and one for non-leading, and there is no change to that. You can continue to close periods in non-leading, though they are open in leading, and vice versa. So basically, the functionality for leading and non-leading did not change, though the underlying tables changed. So all functionalities remain same. What was there in new GL from ledger perspective will stay. Only the table level things are changed. It was stored in Peggle Flex and Flexer. Now it is not getting stored there. So that's a key change. Question. Any thought coming to your mind? Okay. Now comes the appendix ledger. So I want somebody to read this and explain me. Just a simple, there is nothing technical here. Can somebody do that? No? Nobody want to read? Strange. Raj, Kiran, come on guys.
Hey Nitin, so it looks like appendix ledger is nothing but like a leading ledger, but the only difference is on the periods which can be opened and closed separately, independent of the leading ledger.
Mm-hmm.
So is it like a concept of the like the special periods for these appendix ledger, or
Yes. So this is the new ledger which sits on the top of leading ledger. When you create appendix ledger, you flag it as appendix and link that to base leading ledger. Unlike non-leading, appendix cannot have separate fiscal year. So like in leading and non-leading, what we can do is, let's say leading is following January to December fiscal year. Non-leading can follow any other based on the requirement. But appendix cannot have different fiscal year. It can always be same as the leading one. But at the same time, you can open and close fiscal period separately from leading ledgers. So yes, you can open and close periods separately, and separate window has been provided for ledger specific period opening and closing.
so does that mean that when you post to an appendix ledger, you always have to post to the leading ledger?
That we will see in coming slides. There we will discuss about that. An appendix ledger is assigned to the standard ledger and inherits all JEs of the standard ledger for reporting. So whenever you make a posting to leading, it automatically flows to appendix. Posting made explicitly to an appendix ledger are visible in that appendix ledger, not in the underlying standard ledger. So if you post into 0L, it will post into A1 as well. But if you post into A1, it will not flow to the 0L. This concept can be used to avoid duplication of JEs if many business transactions are valid for both ledgers and only few adjustments are required in appendix ledger. So does that answer your question, Raj?
Hey, Nitin, can you give me the example of the previous point?
Which point?
Where you said, so appendix ledger. So the way I understand so far is like, okay, if you have, leading ledger is from US, right? And so for the example, if you have a different countries, you're doing business in different countries, so they have a different ledger there because they follow the different fiscal year, right? So the like fiscal closing in that country is separate, but you're saying that we can do it open and close anytime we want?
No. So There is a leading ledger, there is a non-leading ledger, and there is appendix ledger. So when you say country-specific things, those fall under non-leading ledger. Like US will follow January to December, and IBM China will follow, or IBM India will follow April to March. So fiscal year for country-specific things are changed. But then when we talk about appendix ledger, it's a mirror copy of leading ledger. It cannot be different fiscal year. It will always be same as leading ledger, January to December or whatever it is. The only difference is you can open and close periods separately from leading ledger. So now SAP has given two windows for opening and closing. You can limit the posting only to appendix ledger, or you can limit the posting only to leading ledger. That's what they are saying.
So if somebody posting to non-leading ledger, is it possible?
Yes. So then it will not impact. So if, let's say I'm posting, my company is IBM US and it's January to December. IBM India has April to March. So if I'm posting in December 2015, for US it is period 12, but for India it is period 9, right?
Yeah.
So for appendix ledger, December is period 12 because appendix copies is a mirror copy of leading one. So for appendix also it is period 12. Now if I only want to post in leading and I don't want to post to appendix, so I can specify that. Also I can open the periods separately for appendix and separately for leading, but the period number will remain same for both.
So what about for non-leading?
So non-leading it will be number 9. So you can open, so it will go in its own direction. If I'm posting a transaction in December, it will go in period 9 in IBM India, but it will go in for US GAAP. It will go in period 12. System automatically determines based on the date.
Okay. Okay. I got it.
Okay. So whatever we post in leading ledger are available for reporting purposes in appendix ledger, though they are not physically updated. In addition to that, you can manually post management reporting adjustment directly in appendix ledger. So whatever you post in leading will flow to appendix, but you can directly post anything to appendix which will not flow to leading. Please note that in case of non-leading ledgers, you can post manual posting and system generated posting like foreign currency, but it's not the case with appendix ledger. So appendix should not be taken as example of non-leading ledger. Appendix is an additional ledger for adjustment only. So that's what it says. In addition to that, you can manually post management reporting adjustment directly to appendix ledger. So if you have any adjustment, you can post to A1. It will not impact 0L. So for US GAAP for financial reporting, you will report your 0L numbers, but internally for management reporting, you will see different numbers because you have posted an adjustment in A1. Let's say the total balance of 0L is $100 today, and it is similar for appendix ledger A1 also $100. But for management reporting internally, you want to see that $90 and you want to reduce some cost, some adjustment you want to post. So you can do it in A1 directly. So what will happen is in US GAAP it will show $100 and in A1 it will show $90. You cannot play with US GAAP because you have to report that to the authorities outside. But A1 is something your internal thing. You need not to report outside. So you can play with numbers within A1. So that's what the purpose is. Because presently if you post anything, it will go in 0L. So SAP doesn't allow today to have this kind of functionality because there is no additional ledger today. Appendix is just an internal ledger related thing.
So can these postings to appendix ledger be used for cost center settlements or any other settlements in CO, or they're just purely financial postings only?
No, you can do management posting also, costing also.
Costing also. Okay. Thank you. And do all company codes get assigned by default to the appendix ledger like 0L, or does it have to be explicitly assigned?
It has to be explicitly assigned.
Okay, and so that means that if there's an intercompany transactions between two company codes, one assigned to appendix and one not assigned, it's not possible then.
Yes.
Okay.
The main use case is to give business a management ledger without impacting your financials. So you just asked this question, right? It is basically a management ledger. Internally, you play with the numbers without impacting your financial reporting ledgers like leading and non-leading. You not get APAR details in AL. And the only way you update appendix ledger is through manual posting with limited SAP transactions. So it's not that you can post a payment or customer receivable or customer invoice in appendix ledger. You can only post JEs, for adjustments or like you say cost center settlement or all. But you cannot post a normal transaction like any other transaction like APAR. So this is clearly, mentioned management ledger without impacting your financials. I just gave an example. $100 is financial, but you want to see $90 in management reporting. So you post an adjustment of $10 in A1 and you see 90 in your management ledger. So this is only for management related thing. So that's an additional thing SAP has introduced. The reason for this is since now FI and CO are all getting stored in one table. So when you run the reports, if everything is stored in one table, so it is difficult to get FI and CO separately. So that's why, but from financial perspective, it is requirement is there for every business. Is their management have something else? They do their own adjustment, that they do own tweaking. So that's why this A1 concept is there, appendix ledger. Questions? No question? Okay. Example. Company code 1000, leading is 0L, non-leading is N1 and appendix is A1. So this is a real-time example. So I am posting a normal transaction and I will see this in table. One JE I post. Now you see the first screen now. It is just getting posted in 0L and N1, which is your leading and non-leading. We see entry for both 0L and N1, but not in A1 as it is in appendix ledger. Now we will do the ledger specific posting in A1 itself using FB50L and compare how ECDOCA looks like. Now, the third thing, we post an additional entry ledger specific posting. FB50L is so FB50L is for ledger specific postings, and FB50 is for without ledger postings. Now you see. Now, as you can see, the ledger specific entry gets posted only to A1 ledger, which is similar to behavior in NewGL. The key difference is that for appendix ledger, entry do not flow in all cases, only when ledger specific postings are made. So if I post in only A1, it only get updates A1. It doesn't touch anything else. So the most
in the example which you showed us, the ledger group AI is, or A1, the ledger group looks to be A1, right?
Yes.
So is the appendix ledger assigned to the ledger group A1 or not?
Sorry, say that again.
So is the appendix ledger assigned to ledger group A1, which we see in the screen?
It is.
It is, and even though it is assigned and we're posting at ledger group, it doesn't automatically flow into an appendix. Okay, so you can only post to appendix ledger explicitly through the ledger selection and FB50.
Yes, only FB50L can post. So that's why that's why I said normal transaction will not flow to you cannot post normal transactions to A1 like APAR or anything else. It will be only ledger specific transaction code will work.
Okay, thank you.
So the most profound change you will with using appendix ledger will be in reduction of data volume. You will not have a multiple number of entries based on ledger defined. Also, the appendix ledger will show entries of main ledger for reporting. So the only purpose of this is to reduce the data volume. That's what SAP is trying to target. Suppose if parallel ledger or non-leading is defined in your current landscape, do not have too many difference in accounting principles. Maybe the accounting gap are similar. For example, I gave an example of India and of US and China. So let's assume US and China have more or less similar accounting thing. They don't have much differences, and adjustment entries are very few annually. Let's say 20 in a year. So then using an appendix ledger instead of a standard ledger will provide a data reduction by almost 100%. So SAP is saying don't duplicate your data. Post it once. This will be the key benefit for organization having multiple entities in a single client. So what happens is, every company have a lot of company codes in client in one system, and when they do this ledger specific postings and all, there are a lot of transactions being duplicated. So if we see one company code 1000 transactions, if they have 100 company code every year, they post extra 10,000 transactions. That's data volume increase. Another criteria will be the use of new asset accounting and having cases where we have same asset posted only single gap and accounting principle. So this is another case where this ledger will be used, appendix ledger. I use this appendix ledger in new asset accounting. So I recently did this. We were stuck, then SAP give us some notes and all. So we will talk about that when we talk about asset accounting. But I have used this appendix ledger in fixed assets, not anywhere else as of now. It might be used in future or when SAP could give some improvement, but as of now, I don't felt any need to using this ledger anywhere. But fixed asset, I use this.
So how many appendix ledgers can we create in a client?
One.
Just one, okay.
It's like similar to leading ledger. It cannot be multiple. It can only be one.
So we use this for internal purpose only, or?
So the purpose of SAP for giving appendix ledger is to ensure you use it for internal, because Externally, you already have 0L, so you need not to have another ledger for external reporting. So that's why they say you use 0L for external, you use A1 for internal, and both are copy of anyway 0L is the one lead which leads the data. So you can post any adjustment in A1 and you can see your books internally, but you cannot play with 0L.
So when we defining this appendix ledger, and so we have a different account numbers, document numbers.
No, document number will be same. That's what we just discussed in one of the slides. Now,
but with the example you showed us, I was looking at the document number for okay, you have 8600 document number for your A1s, right?
so 8600 is only for A1 specific ledger.
Okay, so yeah, that's my question. So document number will be different for 0L and A1, right?
No. So when you post into A1, it will have one document number, but if you post into 0L, it will have one document number. So in my first screen, I post to ledger group where all ledgers are posted. In my second screen, I only posted FB50L specific to ledger. So that's the difference.
Okay.
If at the first instance you run the report and you see A1 also, you will see the same document number 1000106. Same document number will be visible in A1 as well. But in second entry, I only posted to A1, I didn't post it to 0L and N1. So that's why it shows a different document number.
Okay, so we define this in SPRO, the document number for how the document number.
The document number range we have to define.
Okay, and you're going to show us.
This is a fun. I can show you, but this is something This is a financial. This is not something new with Simple Finance. This is an FI related thing, but I can show you in SAP.
Okay, thanks.
Any questions till now?
So I have a question, Nitin. This is not related to the universal GL, correct?
Right. That will come. That's the next topic. Universal JE.
Okay, because we're talking about the posting. So maybe after the next topic, I'm going to be more clear. Right now, I still have some doubts. I'm writing it down. Then, after the next topic, I'll ask you all that.
Yeah.
Thanks.
So universal general is the next topic. We will talk about. I have some more few here. From table perspective, and then we will talk about the next topic will be the universal JE. Any questions till now? Just give me 2 minutes. I'll start with the next topic. Okay, shall we move ahead? Any questions you have till now? Okay. So simple finance is called to be the single source of truth for accounting. Why? So till now, in new GL environment, when we were posting, SAP was generating two document number, one for FI and one for CO. Now, if you see the first line, logical link between FI line and CO line to create one document for each posting. One document for each posting in FI and CO and in ledgers. So only one document says everything. New reports allow drill down from aggregate P&L statement to detailed line item by customer, by product, by region, and detailed queries across all spend categories. So it's not that you have to run multiple reports. You have a P&L, then you run another report for AP, another report for AR. You have one report and you can drill down back up to the, by this level, the examples are there. By customer, you can see what is the say spent by customer, by product, by region, whatever criteria or characteristic you have. So you need not to have multiple reports. So that's why it says single source of truth. Line item document journal entries and provide link to original document, examples since transaction material movement. So this is also there today. So the link to the documents is already maintained. The document flow is there. You can drill down from payment to invoice, from invoice to purchase order, and from purchase order to purchase requisition. You can do all those drill back today. Combined line item document allows selection from around 400 fields using the speed of Hana. So we just discussed about the table Ekdoka that have around 400 fields, and everything will be stored in the same table. So you need not to have data from different systems. One table will give you the entire picture, and that's why reporting will be easy because everything is based on one report, one table. Account as leading dimension for both FI and CO. So presently what we have is in FI we have account, and in CO we have cost element, but those are merged now. So account will be there for in FI and CO both. Additional dimensions in FI we have different things like company code, business area, segment. In CO we have cost center, order, WBS, so that will remain as a cost object and other identifying objects. So that's why simple finance is known as single source of truth for accounting. So just go through these lines. These are a bit technical. These are the lines from SAP directly. Nothing I have changed. So very short, but have a meaning between the words. So just go through these lines, these 6-7 lines at least 2 times quickly. And in case you have any question, just go ahead. So just take 2 minutes and read this because this is very important. When you are going to sell yourself for simple finance, these will be some of the key questions. And don't hesitate to ask any question you have. Don't worry, But this
Listen,
is
I have
the
a question.
yes.
Uh, so, uh, uh, when we're talking about the cost center, WBS element, so do we need to still reconfigure whether, in controlling you have your internal orders or the projects, right?
Mm-hmm.
We still have to do all that. Uh,
Yeah, that has to.
that stuff's still the same.
Yes.
Okay. So we still going to have in a simple finance, you can see an internal order, or if it's a WBS element.
Yes, yes. Everything is there. PS will be there. IO, both modules are there.
Okay. So any changes there, or do you need, we still have to do the same configuration in CO?
So as of now, same. SAP is planning to bring some changes in next release. We don't know what is in in upcoming stage. So as of now, it is same. What I have seen in system as of now.
Okay. All right. Thanks.
Some changes are planned, so we don't know what SAP comes up with new thing in next few months, 3-4 months. Right? Any other question? Feel free to ask the question. I'll share this document with you, uh, and then you can go through it again and all the detailed slides. But let's ensure that when we are talking together, none of your question is missed, because this slide is pretty important. Okay, let's move. So this is the classic logic we have today. We have FI, BKPF, BS, BSEG, header table, line item table. Then we have CO, we have header table, we have line item table. COBK is header, COEP line item, BKPF is header, BSEG is line item. So this is today's environment. So Mohammed, I think you can try to understand this structure, because since you don't have a FI background, so it will help you to understand how it works in today's environment. Then from simple finance, it will be easy. My next slide shows how it works with simple finance. So it will be easy for you to make a relationship. Okay. So okay. So new logic. Now somebody has to explain me the difference. So in this, if you see, the line item tables are there, but the header tables are grayed out, BKPF and COBK. So those are no more required. Up to now, so let me explain you the diagram. So up to now, the line items between FI and CO have been linked to each other on header level. This has the following adverse effects. So all the documents, FI and CO documents, were linked from the header level. Reconciliation was an issue. It was hard to reconcile documents of different granularity, especially payroll, with more FI and then CO items. Reporting and reconciliation across financial applications was difficult, especially between FI and SOPA. No overall reporting. Bringing together legal view with details of responsibility segments at a glance was not available. But in simple finance, those are linked through the line items, not the header, because everything is stored in ECDOCA table. And so now you see FICO logical document link FI and CO data in the second button. Totals and are on the fly, and then analytics. So there is no redundancy of data and there is no breakage of link. So link is there now. That's what the difference is coming. FI and CO. Till now it was two separate modules. Their documents were linked. SAP was generating two document numbers, one for FI, one for CO. You have to look into two different places. Now it will be, everything will be one. Questions? No? Yes?
So when you say the line item table, the header tables is grayed out and the line item table is there, but I thought everything is in one table now.
Yeah, so that's what, they have mixed up they have taken out those into one table. That's what it says. But it says in current environment, the two documents were linked through the header table. But now since, everything is in one table, so that is not required now.
Okay, can you give us the example, right? If you have a document with, FI document, in that document you have like 10 line items,
Mm-hmm.
right? Those 10 line items, uh, so if you know, so how are you going to link each document line of controlling, like CO and FI line item together? If it has a different settlement or something, or the line item, let's suppose the delivery is not get it done, right? For line item 5, it's still pending, but you have to bill the customer for whatever they received.
Hold on. You are moving from FICO to SG. So if you want to understand FI, so let's take it this way. So let's say there are 2 line items. I post cost. Let's say travel expense and bank charges. I post in FI. It goes to CO. So presently what is happening is in my CO document is always a one-sided document. It does not have 2 sides. I don't know if you are aware of this. In present environment, CO document have only one side. It is not a debit and credit like other documents. It's one-headed document. So it just says $100 and this cost center. That's all. This cost element. And it have a separate document number. But in new environment, number 1, the document number will be same. Number 2, it will be part of that ECDOCA table because FI is merged with CO from cost element perspective. Now cost element is a GL as well, so it will be visible in ECDOCA table. So if you run the same table, you will get both the picture from FI and CO perspective rather than in 2 reports, which it was done till now. So it is totally different what you are talking about from delivery perspective. It's not that FI and CO is not that in that line which you are talking. What happens is if we post something in FI, we give a cost center or internal order that's a cost object, and based on that cost object, system determines it's a CO line and it generates an additional document number in CO and it shows you separately. When you run the document flow, the CO document is visible separately. Clearly says this is a FI document, this is a CO document, this is a ledger document or whatever. But now that will not be there. So we will see all those things, when we go into system and work. So these things will be there. We will test when we run the ECDOCA table. We will see all those how ECDOCA looks like.
Okay.
Right? Yeah. I think you are from SG background. You have some background of it.
I have a background of SG and CRM. Yeah.
Okay. So that's fine. It's good you have a background, but this CO runs on a different line. That's the problem with CO. So don't worry about that. We will get those cleared. When we get into system, all your doubts will be clear. But I just want to ensure that whatever doubts you have, and I'm saying it will be clear with the passage of time and with the coming slides and system. Please ensure you note those doubts and those are getting cleared. It's none of your questions. Yeah. This is for everybody. Please ensure those doubts which are planned to be addressed in different topics. Please ensure you have noted all those doubts. And if I'm missing anything, at that point you let me know that this is the question. So nothing should be missed because this is the learning time. You have to ensure you take maximum benefit. So I want you guys to understand. Take 5 minutes, read this slide and understand, and then I will have a question on this because this is pretty simple. The purpose I'm asking questions from you is I want to ensure the session is interactive. I don't want few people sleeping. So this is another topic, which SAP is introducing integrated business planning with simple finance, but this is not as of much importance because uh, planning normally doesn't come under finance. That's the first thing. And so your role should be more focusing on migration perspective. And planning is still there today, but I haven't done anything in planning in my 10 years career for SAP FICO. So in future, I expect the same. There will be not much scope of planning in future. More important is the accounting system, the ERP which is there today, accounting, migration, fixed assets. So those are key important areas of simple finance, payable like DOCA, universal journal. Those are the key topics which should be focused. Planning are not focused on much on planning.
This is basically replacing BPC.
Kind of. So even SAP has not given much details about IBF, integrated business planning. So that's why it is not clear. There is no material available. None of the customer is implemented. So there is nothing to say actually about this much. Because presently, in simple finance, SAP is more focusing on accounting and migration. That's what their focus is. So they have not done much development in this. If at the end of the session you guys need some material, I do have some SAP material for planning. I can share that with you for your information. But more important is, migration, accounting, CO, EDOCA, universal journal, assets. So those are the important topics. Questions? Shall I ask? Okay. So what is the difference between current financial planning and future financial planning in SAP? Anybody? Feel free to answer. Don't worry if it is wrong. Don't worry about it. You have to learn.
So the current financial planning involves a lot of different systems. You need to bring all the data together, and the future is basically everything will be in one machine,
Yes.
and it's much faster.
Right. So if you go to the SAP term, it says integrated business planning. So when we say integrated, so presently everybody is doing their own planning. Production is doing their own planning. FP&A team is doing their own planning. P&L planning. Production team says production planning. COPA, they have on their own profitability planning, expense planning. So everybody is doing their own planning, different places, different systems. But with this, with the new structure, everything will pass on through HANA. So planning is done in different boxes, but the data will flow through HANA in an integrated way, and it is easily accessible by central team, or you can say that, let's take an example, CFO. If you want to see what the plan is for each department, he can see that. So because now everything will be system driven and integrated. So boxes are separate. The only thing is it is integrated through HANA database. That's the key. That's why it says, in the second box, if you see the bottom diagram, it says expense planning, profitability planning, and everything is passing on through HANA, going and coming from HANA view. So that's more important because now the database will be HANA and everything is passing through the same database. So since it is HANA, so the views will be common, CDS views. So that's a key difference, and that's why it is said integrated business planning. The business planning is happening today also, but it is not integrated. It is siloed. Any question? Is this integrated on SAP GPC on HANA integrated together? This is HANA, but more details to come, Raj. Redundancies of total index table. So classic FICO, you have totals table, you have indexes, and you have document tables. Now only documents, no indexes, no totals. It will give you speed. It will give just save your data storage. List of obsolete tables, index for GL accounts, index for customers, index for GL table, totals, Regal flex. Oh, it's there. No, it's not there. So I'll update this list. All indexes are replaced. You see index for customer, vendors, cleared items, GL, everything replaced. So a lot of tables have been removed. As we move, we will talk about more tables. Top tables, a lot of transaction codes have been removed. So we will talk about all those, as we move. This is just the slide set mentions overview of simple finance add-on. So I'm just taking it to a high level, and then we will get into drill down of each thing, one by one. I have a big document uh, for simple finance 1511 updates, but unfortunately that's a customer specific document. So I'll try to share the snapshots of the document. It's a big 217-page document which gives all the updates what SAP has given in each area, including logistics, you know, FI and logistics and CU and everything. But that's released for customers, so I cannot share that document. But I'll try to share the important things in the snapshot of the document. That's how SAP as SAP moves, they develop new things, they improve the product. So they release such documents for customers. So on index and totals, just a diagrammatic representation. Fixed field and flexible fields. So now you see previously more fields were fixed in normal ERP financial which any classic database. Flexibility was limited, but now the fixed field has been limited and flexibility is increased. So there are no indexes. Previously the totals were fixed, now the totals are the part of flexibility. Any question? No question? We're going too fast? Yes, no? Nobody is interested to speak today.
No, I think we're a good pace. So this stuff, I don't have any questions.
Okay. Raj, Amarnath, Kiran, I want to hear from each of you. It is important that what I'm trying to explain, it is clear to you, and all your questions and doubts are addressed. Even if I'm going too fast, please try to stop me. So to ensure what you expect and what you are eligible for, you get that.
Sure, I mean, I'm clear for now.
Okay, perfect. Okay. I'm suffering from cold, so facing it a bit difficult to speak and because of throat and all. Okay. Cash management, we will talk about it later. So I don't want to jump into cash management. Okay. This is the last thing. Okay. So cash management have been changed massively. So that's one key thing. And in recent 15.11 update, I read, in a document that what is the topic? One area have been changed, removed. Credit management have been removed from AR module. Now it is only available in SCM, FSCM, financial supply chain management. So a lot of changes have been addressed, like address business cases are bank account management, renewed cash position, bank analysis, separate bank account with GL account, bank account creation and modification approval process, signatory and method authorization, root cause of cash in out bank account. So these are the key changes, just talking at high level. A lot of changes have been done in cash management. So we will discuss about cash management and configuration. I have standard material which I'll share with you. So that's why I don't have much slides on cash management. So I'll talk about the standard material I have. The EKT material, early knowledge transfer material was from SAP. Again, same lot of tables have been removed from cash management as well. Any question? So I'll share these slides with you guys. You will get the access to download these slides. I'll share it with Kavya, and then you can download these slides and all from their repository. Any question? Feel free to ask. No questions? Okay. I have this much for today. So I'm also struggling with my throat. So from next session we will continue. Let me see what next session is about. So this we have done. So the next one we'll talk about the universal journal, and then we will move to migration. Let me see if I have something for the universal journal. Okay, so let's talk about universal journal before we close for today. So universal journal is a unified data storage for both financial accounting and management accounting, FI and CO. It contains all the relevant accounting data details about, for example, customer, vendor, assets, product, region. This means all of the accounting data is always available at the same time for analysis in each report. That is based on the universal journal entry. And in addition, you can enhance the journal entry with your own field. So universal journal is something, when we post a JE today, we have limited field, but with Simple Finance, when you post a JE, you have a lot of fields available. You can put customer, vendor, everything in JE, asset number, and all those things. So there are around 350 to 400 fields available in Universal JE. And also SAP gives you the flexibility. You can enhance the JE with your own fields. So you can also enhance if you have some, like in COPA, you have any specific fields, you can enhance those. Financial accounting and controlling are continually being reconciled. So since it is one table, it is being reconciled. As a result, you can carry out month-end closing more quickly. So since those are reconciled, your MEC will be fast. All accounts, even the secondary cost elements are required for controlling, are portrayed uniformly as GL accounts. So this is one of the key changes. Today, secondary cost element does not form part of FI, but in future, secondary cost element will be as good as GL account. A journal entry similarly created for internal clearing such as cost center assessment and distribution. But so that's why today if you do some assessment you do in CO, it does not reflect in FI because secondary cost element are not there in FI. But in future secondary cost element will be there in FI. So what you do in CO will be reflected in FI. As a result, your FI and CO are reconciled. Account-based profitability analysis is also fully integrated in the JE. This ensures a continual account-based reconciliation between FI and CO. The differentiated display of cost of sales in various cost components, for example, material, production, and overhead, is also possible with accounts. You can continue account-based and costing-based COPA in parallel. So as of now, costing-based COPA is not supported by Simple Finance, and I say not supported. It's not that integrated with Universal General and ECDOCA table. Account-based is fully integrated. Processing and analysis of data is based on a line item rather than pre-configured total. So presently what happens is SAP stores the total also. So all your analysis has to be based on that logic. But in future, you can put your own logic to get the data because everything will be on the fly. What input you give, SAP will give output based on that. It will not have a table restriction because today table totals are there. You have to respect those totals. Moreover, you do not have a set up aggregate before evaluating the data. So today you have set up aggregates, which limit the type of analysis you can do and the speed of the analysis. So today, the type of analysis is limited because line items are there and totals are there, and you cannot drill down disrespecting the total. But in future, total will be on the fly, so you can do all your analysis based on line item, and you need not to worry about totals, and that total will be on the fly. With SAP HANA, you can perform your analysis quickly. This covers all the dimensions that you have in your line item. So all dimensions you have in line item, based on those you can do your analysis. The document containing all relevant data for business transactions has been posted in one of the following application contents. General ledger. So when I say GL, it includes AP and AR. Fixed assets. Controlling. In controlling, the exception is costing based COPA. Material ledger. So if any of those components listed, if any of the document is being posted, any transaction is posted, that will fall the part of Universal JE. The universal JE can be used for reporting on legal requirement, responsibilities, and market. So same data you can use for legal reporting as well as for responsibility accounting and for market level, market or segment. For example, spend analysis by area, P&L statement by market, WIP analysis by cost object. The universal JE links financial accounting with controlling and COPA at the line item level. Now your FI and CO are linked at the line item level. That's a change universal JE is bringing. So this is the present state before simple finance. Everything is coming to GL, but everywhere we have to do reconciliation. Material ledger to GL, asset accounting to GL, CO to GL, COPA to GL. And we have a lot of challenges, in data movement and all. But with universal JE, everything gets posted into universal JE. So if you see GL, COPA, CO, assets, material ledger, everything posted into one bundle. So it says if there is a BI present, using BI, only one single extractor is needed. If today you have multiple extractors for GL, COPA, CO assets, you have multiple extractors, but in future you just need one extractor. So in the new architecture, the motto is take the best of all the world. Example, ledger, market segment, coding block, etc. Secondary cost element are GL account. One line item table with full detail of all components. In one table you will get everything. Data stored only once, no reconciliation needed. So in the present environment, data is stored at multiple places. So then we have a lot of reconciliation things going on. In future, it's only once. Reduction of memory, IT benefit, less memory consumption because data is not redundant. Fast. Technical preparation done to enhance important structural capability of financial solution. Multiple currencies, gaps, and all those things have been considered. So this is universal journal. That's what the SAP says. Words, take the best of all the words. So SAP knows it very well. Today there are multiple words, data sitting in different modules, different places. And now they are saying take the best of all the words, put it into one table. So FDOCA is the key table which have GL, CO, assets, material ledger, COPA, everything, all the fields you need for posting at line item level. FDOCA stores that. Multi-gap capability through RLD and R dimension. It's gap. I think it's ledger. So we will see that in detail. 6-digit field for line item numbering. 23 digits for currency field. So this is how the new table looks like.
And then, so if it's 6-digit field for line item numbering, so there is no more restrictions on 999 line items for FI documents, is it?
Absolutely. That is one of the restrictions. Customers were struggling to remove that, because till now it was 999, and when they have more than 999, they have to post multiple documents.
Mm-hmm.
Now it's 6 digits. So 6 digit means 999999. It can never happen. No customer posts 1 million line items together. So that's removed now. So there are around 369 fields in ECDOCA table. One table have that massive field.
And the 23 digits for currency, does that include the USDN or like 5 decimal points, or is it just the whole number?
I think it's a whole number.
Okay.
Yeah. Any question? So just a quick recap. Universal Journal we just talk about, it contains everything. One table will have everything. So Universal Journal is basically a ECDOCA table. Cost-based COPA is a limitation. As of now, it's an exception. Account-based COPA works well with ECDOCA table. So when we say GL includes GL, AP, and AR by default. The subledgers, asset accounting runs separately, but it is also a part of this controlling material ledger. One line item table stores everything. This is the previous structure. A lot of reconciliation being happening, but now all those are avoided. Questions? Anything you have any question on Universal Journal?
Maybe can you go back to the slide, the last slide, please? So here I see that the corresponding line items have artificial document numbers beginning with letters. Example A. What does that actually mean?
So there are rare cases where entries in ECDOCA are written without a document header. So like the carry forward documents, correction in migration, those does not have any header level information. So these entries do not represent, because those are exceptions. Those are not standard business documents. So those line items have artificial document numbering beginning with letter A. So just to identify, if let's say A1234, so it's something unique. Let's say a migration correction. B1234, a carry forward document, because they don't have headers. So that's why SAP try to differentiate with a normal document and then these exceptional documents.
Okay. So for example, in the case of carry forward, which period will that be associated with? Is it like period 0 or is it period blank?
Period 0.
Period 0. Okay.
So this is for the purpose, when you run your reports and all these transactions you don't want to see or you don't want to represent to external auditors. So that's why they have given these functionality to internally do that, and that's why the ledger appendix ledger comes into picture. So now you can do all those internal things in appendix ledger, and when you present your books to the authorities, you present them the clean state.
Okay. Thank you.
So basically, all the line item tables, they combine all the line item tables to a single table, but you still have your header table.
Yes. See, because all your analysis normally runs on line item actually, or if you want to do a total, you need a line item. If you want a report, you need mostly the line item. So line item combination is a big win. Any other question on universal JE?
So on your previous slide, you have the multiple gap procedure. Not this one, the previous one you have. Not this one, the last one.
Last one.
Yeah, this one right here. So multiple gap capability. What is the RLDNR?
So I think this is the technical name. So I believe this is a ledger. So I will check that and I'll let you know.
Okay.
Yeah. So RLDNR is, I got that. So in the same screen, it is the second one. So let me show you. Okay, this is not. So the second field is RLDNR, and it says ledger in general accounting. This one.
Okay, it's a field name.
Yeah, it's a field name. So that's why I say it's a technical name. So RLDNR means
Okay.
ledger in general accounting. So with ledger, you can identify it's a US gap or a local gap or appendix gap, whatever.
Oh, okay.
Okay. So what I'll do is I'll share these slide deck by today, and then once you have those slides set, you can go through them, and then we will move now. The next topic that we are going to cover is the next session is migration. And I will add a few more topics in this list. After results of migration, we have 1511 updates, and although I will add more topics, but this is something as I learn more new things, I will add here. But as of now, we will move to migration in the next session.
So you're going to give us a system demo soon, or?
Yes. So when we start migration, so till now it was all going in theory. So when we start with migration, the system comes into picture.
Okay, so both ECC and Hana S4 database.
So why ECC? It will be ECC with the add-on of Hana add-on, Simple Finance add-on.
Oh, okay. Okay.
Okay. Okay. So any other question you have, you can feel free to, you can. I think you have a blog. Kavya, are you there? I don't know if she's there. Kavya? Okay. I think she is left. So you can post questions. I think you must have the blog access. So you can post your questions if you have, but we'll meet in next session with the next topic, which is migration. Right. In the meanwhile, you go through these slides which I have discussed, and in case you have any question, we can address in next session. Before we start with the next topic, I can address the questions you have.
So I have a question. This is the very high level you're talking about, right? Or
What?
so for the topic you cover, is it a high level, or you have a detail? We're going to get into the details of it.
See, till now what I have covered is I have covered only the overview. If you see my two topics, the overview of simple finance. So I have covered overview perspective. I have covered in lot detail. Now the key thing comes is the migration. So that we will cover from system as well as theory both. So we will go into full detail of migration and new asset accounting. We will go into entire configuration of fixed assets of new asset accounting. We will go into more
Okay.
details of this topic, but overview is what simple finance is, what it works, and all those. Those is something we have already discussed. There are a few SAP
Right.
notes which SAP talks in detail. So I'm trying to get access to my ID is logged, the S user ID. So I'll download some notes and we will discuss before we start migration. Right?
Okay. Sure. Okay.
Okay.
Thanks.
Okay. So see you guys in next session, and I think next session will be next year. So happy New Year in advance, everybody. Have fun and have a good party.
Happy New Year to you, Nitin. Thank you.
Thank you guys. Thank you so much.